At the end of the day, the GDP growth is really critical here. And despite today's strong stock market rally, this was anything but a bullish day for the U.S. economy. To the contrary, the Fed is sending mixed messages. It's showing that we need a Fed-induced rally, which are generally not to be trusted, to support this economy. It's the Fed saying that, look, things are weaker than we thought they were going to be, so we're going to backtrack. How is that a positive message? Sure, it's positive if you want to see a rotation into commodities, a weaker dollar, gold, even emerging markets. There are benefits that come out of it, and there are opportunities. It's definitely not a positive message for the U.S. economy. And I think the critical message here is the Fed is sending mixed signals, and the economy ultimately doesn't like mixed signals. It doesn't like uncertainty, and it doesn't like contradictory notes coming out of the Fed, and that's what we're getting here.
The movement that we've had in markets year to date has been pretty unusual. I mean, we took one of the worst starts to this year that we've had in history. Then we ricocheted right off that, coming right back up to where we are today. You know, you have to wonder, has that much in the world really changed between January and now almost April?
Well, I think you make a great point. And also, look at the volatility in this market. The volatility was really starting to move up. Certainly it moved up last summer, spiking dramatically, began to move up earlier this year, and it's just fallen off a cliff. And that's a sign of complacency in the market. The market's really uncertain. Volume, volatility, those are really critical issues that we'll look at. You know, the Fed is not just being dovish here. The Fed is being downright chicken because they are afraid to take action, any kind of action that might further derail the economy and push us into negative territory on GDP. Well, it's interesting. When we look at Restoration Hardware's earnings coming out, obviously, when you look at the stock price, you look at a chart of it, the word that comes to mind is train wreck. But I think when we look more constructively, it's been an execution issue for this company. The housing sector has brought us here. This is the nexus of housing, the consumer, all of these issues. But the housing issue won't lead us from here. We need to see a rotation into some more traditional value names. The weak dollar will help us here, will give us an opportunity to broaden out this rally and maybe give us a tailwind in overseas earnings. So I'm optimistic with regard to the weaker dollar benefiting earnings, but that's short-lived. We need to see economic strength. I would say as a result, again, we go back to a company like Restoration Hardware, execution is Chipotle-esque. And that's not good for a company when management can't execute.
You did the Chipotle thing?
I think what's interesting about Restoration Hardware is they have a very loyal customer base. So at the end of the day, that will save this company. But management does need to take a hard look. Look, if you're a contrarian here, maybe rather than buy the stock, go to the Restoration Hardware outlet and you'll be able to buy their new collection at 50% off because they haven't been able to deliver it to anybody during the quarter. But I think ultimately this company is a good franchise. It is a good brand. They do have a good eye for fashion. They just certainly haven't shown it in the last 6 months.
It is interesting, Larry, because if you just knew the worsening details of the political situation, you look at the market performance and say, what's going on? Is this all anticipation that she will be ousted? Because even as this has dragged on, their economy has gone from bad to much, much worse.
Impeachment is actually a contrarian indicator, and it's very bullish. And Sir John Templeton said you buy when there's blood in the streets. When they're throwing out the leadership of the country, there is blood in the streets. Assuming we continue to have a commodity rally, which we're having, you'll see a stronger currency. You're going to see stronger exports. You're going to see the country start to stabilize. And they've been through a lot, but valuation is really compelling here. People have dumped the emerging markets wholesale, and there is an opportunity here, and there's an opportunity for a variety of reasons. Look hard and look close at Brazil, among others.
But I guess the question is, Larry, though, do you really think that there is going to be continued rally in commodities? What brings that about? And don't they have a lot of other things to contend with? Something like, Zika virus that could be a huge impact to this country.
Yeah. So commodities have been the worst performing sector for the last 5 years. And as they say, the old adage is you can't fall out of a basement window. Everyone has dumped their commodities. There's been deleveraging. They've cut back on supply. And assuming the global economy can hold together, you could see the basis of commodity rally. But a lot of this is currency related. And I would say that, we have a massive Brazilian community here in the greater Boston area. And admitting you have that problem is the first sign to the recovery. They admit that they need to throw out the leadership. That's an unbelievable statement that most countries will never make. They're so disgusted with the corruption that's going on at Petrobras and other companies, all the leverage that's just been thrown away in the wind, that they are making the reforms that are necessary. And I think the Zika virus will find an antidote. I have a lot of faith in biotechnology, and there are opportunities ahead in the emerging markets.
Oh, wow. Sounding more bullish on Brazil than I've heard anybody in a while. Larry, appreciate you joining us. Larry Glazer there from Mayflower Advisors.